Hello, my name is Destiny, and welcome to Pearl Lemon Accounting. Today we'll be discussing asset disposal. The biggest question that you might ask yourself is why would a company dispose of an asset? But there are many numerous reasons as to why a company would dispose of an asset. Reason number one, the asset may have been damaged. If an asset has been damaged too much, it may be considered unsafe to use for the workers and thus has to be disposed of. Reason number two, the asset may have depreciated to its residual value. As every company has its own depreciation policy, they have a residual value as well, which is the moment at which they decide to sell the machinery, the vehicle, the equipment, whatever the asset may be. So once it reaches that point of the residual value, the company aims to sell it. Another reason is that there may be an upgrade available in the market. For example, when version might be out and you use the old car as a deposit. The fourth and final reason, which is one which a lot of shareholders of companies might not want to see, is for liquidity purposes. This is if the company cannot pay for any of its assets or any of its short term debts, and thus they have to sell the assets to pay for the short term debts. Now we move on to how to account for asset disposal. Step one, you'll be calculating the total depreciation. Step two, you'll be calculating the carrying amount. And step three, you'll be accounting for the amount it was sold for and recognize profit or loss on disposal. Illustration one. Pollard Construction is a construction company that builds skyscrapers in the biggest cities in the world. Pollard Constructions decided to dispose of a crane. The crane was bought in 2015 at a cost of $2 million. The crane had a life expectancy of 10 years with a residual value of $200. Pollard Construction decided to sell the crane as they had the opportunity to replace it with a better state of the art crane. Pollard Construction sold it for $800,000. So step one, you're going to find out your depreciation amount as you're calculating your total depreciation. So your depreciable amount will be the total cost minus your residual value, which here is 2 million minus 200,000, which will give us 1,800,000. So now you calculate your total depreciation to date. You divide your 1,800,000 by 10, and then you times it by the 7 years it's been in use for, which gives you 1,260,000. Now we move on to step two, which is calculating the carrying amount of the asset. The total cost was 2 million and the accumulated depreciation is 1,260,000. Thus meaning the carrying amount will be 2 million minus 1,260,000, which gives you 740,000. Now we have to account for the amount that it was sold for and recognize the profit. So you go on and you see that we received cash of 800,000, but the carrying amount is 740,000. So you minus your cash received from the carrying amount and you realize the company made a profit of 60,000. Thank you for coming to Pearl Lemon Accounting. Like and subscribe to the channel.